Hello, everyone, and thank you for joining me in today's weekly analysis webinar. Today is Monday, the 5th of August, and it's the beginning of a new trading week. I can see, or we all can see, that this week might be very, very volatile. We are having some, elevated risks in the markets. We're having great moves in the markets, most of which are sell moves or short moves, because pretty much as we speak, everything is going down. We are looking on commodities. We have gold, copper, silver. We have oil. We have gasoline. We have other commodities like agriculture, cocoa, coffee, cotton. Everything is going down when it comes to the indices, global indices, US, Europe, Asian markets are going down. Even cryptocurrencies are going down. Even treasury yields, everything absolutely is going down. So hopefully it will be a good week because, yeah, at the end of the day, when we have volatility in the markets, this is when we can expect to make some good profits. On the other hand, yeah, there are risks. However, let's see what can happen and how we can trade those weeks. Markets are bleeding. Yes, of course they are. So let's start by having a look on the economic agenda. And before going into today's economic agenda or this week, I would like to have a look on Friday's economic agenda because this is somehow was the reason for all what we are seeing here. So during the last week, we had the FOMC meeting, okay? They kept interest rates on the US dollar around the same levels, which is between 5.25 to 5.5. And somehow, okay, they didn't say we will be cutting interest rates in September meeting because the Federal Reserve will never do. Jerome Powell will never say explicitly that we will be cutting interest rates in the next meeting because, he will have to leave, all possibilities there. However, most of the speech, most of the sentiment and the tone for the meeting was that we are setting the path for a federal cut rate in September. So that was the first dovish, hint from the Federal Reserve. Markets are already expecting a rate cut in September. Somehow the Federal Reserve confirmed those expectations and things were going pretty much great. However, on Friday, we have seen this report, um, the labor market report. And let me tell you what's going on here. First of all, when it comes to the non-farm payrolls or the NFP, or let's say the new jobs, it went down to only 114,000 new jobs for July, which is way lower than the previous reading. The previous reading is 179,000 new jobs. It was also revised downwards from 206,000. So going down from 179,000 new jobs in June to only 114,000 new jobs in July, it's pretty much a great move lower. That's the first thing. The second thing was the unemployment rate. The unemployment rate is 4.1%. Okay. It was expected to stay at the same level. However, it ticked higher, not only to 4.2%, it came to 4.3%. And when it comes to the unemployment rate, a 0.1% change is really a big change. So it didn't go higher by 0.1%, by 0.2% to 4.3%, which was somehow shocking to markets. Personally, I don't really believe or I don't really see those numbers as, okay, we are heading into recession. Okay, the global economy is collapsing. Okay, we will see. And this tone, which is somehow affecting the markets at the moment, I do really believe that most of what's happening to the unemployment rate or what happened in July was basically because of the hurricane or the Beryl hurricane that happened. It affected around 2 million citizens in Texas. Complete cutout, no electricity for 2 million citizens in Texas. So this is definitely something that we can expect. However, this unemployment rate going higher for July is the temporary layoff. Remember what happened back in COVID-19 period. What happened was suddenly we were having, this quarantine thing. People were kept at home. All the places for like gathering, parties, cinemas, cafes, restaurants, everything was closed. So when those places were closed, people and employees were basically staying at home. So they were counted as people who were jobless. And in a sense, they are not basically jobless because they didn't leave their jobs for an economic situation, but they left their jobs for something temporary. So although we had very, very high numbers on unemployment at that period of time during the first, part of the COVID-19, when things started to cool down a little bit, when quarantine started to cool down a little bit, and people started going back to their jobs, those unemployment numbers were quickly reversed because those people, the millions of people who were staying at home, they weren't basically jobless. They had a job, but they were staying at home for a reason. I think what's happening here with the unemployment rate going higher in July from 4.1 to 4.3 after the hurricane, which affected 2 million citizens in Texas, is definitely something normal. And I believe this will be back, let's say, to normal range numbers in the next reading for August. So I don't really see why markets are overreacting at the moment. At the end of the day, the Federal Reserve or any other central bank, they don't really, okay, they say we are data dependent. We look at numbers before taking decisions, which is right. But they don't basically check data point by each data point. I mean, this is a data point here that we're having, which is 4.3. It doesn't show a trend. You know what the issue is, or what will really be the problem? If the next unemployment rate, instead of being 4.3, maybe went higher to 4.5 or 4.6. At this time, I can say, okay, markets are crashing and the economy is going to collapse and so on, at least for, a major recession. But one data point going higher than expected, even by a little much, but after, a hurricane, I don't really believe uh, this should be an issue. I believe markets are overreacting. The US indices, especially US indices, guys, we have been talking for a couple of months that the US indices are hitting all-time highs. If markets retrace, supported by some bearish news, it's not collapsing. It's the normal pullback. I'm still basically not, finding any reasons to panic in the markets. I think this is normal. And during the week, I believe markets will be back to their senses. Okay. So that's pretty much what's happening in the markets at the moment. And of course, we will have a look on the exact charts when we are down on the technical analysis. But let's have a quick look on the economic agenda for today and for this week. Okay, markets is bleeding. Lol, yeah. I really like the way you are analyzing the news based on market reaction. Thank you very much. This explanation is good and very useful for me as a beginner. Yeah, thank you. Guys, what I'm trying to teach you through those live sessions is uh, when you open an economic agenda, I just don't want you to follow this, color here. If it says it's green, it's automated. I want you to have an understanding of the fundamentals of the economy. If a specific number is bearish or it's lower than expected, is it really lower than expected for some reason, or is it just, that the economy is affected? In this case, the unemployment rate, yeah, it's very bad. But when I looked at the numbers for the components of the unemployment rate, I found out that major or huge part of why the unemployment rate went higher was the temporary layoff. And this is counted as well, not the permanent layoff. The temporary layoff after the hurricane, okay, it made sense. This is something temporary and it should be corrected, in August reading. Okay, so this is what I'm trying to do here with those sessions, to be having a deep understanding of what's going on. So yeah, today is Monday, the August 15th. We're having a holiday in Canada anyway. They will not be affecting the markets. We will be having the monetary policy meeting minutes. I haven't yet checked this. It's already out. We've had some numbers from the PMI in Europe. Nothing of interest so far. Yeah, we'll only be having the non-manufacturing PMI from the US economy today. And yeah, that's pretty much it. Expected to slightly go higher, 51.4 after the previous reading, 48.8. Not sure why they are expecting an upward move, especially that the previous one was really bearish. Okay, let's wait and see. This might affect markets. Okay, guys, today when I'm talking about the economic agenda, I will not say what is expected to drive higher volatility than usual or not, because basically this week should be a volatile week. That being said, I will not be, specifically flagging any specific news because markets want to know what's happening. So all of the data releases that I'll mention today is expected to have higher volatility than usual because the whole week, the whole economy right now, what's happening in the world, guys, it's expected to drive higher volatility than usual. And yeah, by the way, don't forget what's happening in the Middle East. I don't really try because at the end of the day, I'm a fundamental analyst. I'm a technical analyst. I'm a financial markets analyst. I'm not a political analyst, okay? Or I'm not a political strategist. So I only try to understand what's happening in the political scene, but I don't try to analyze this or tell you what my expectations are. Okay, Iran is expected to have some, retaliation or some, uh, you know, some sort of political military response back. Will this happen? I don't believe so because it couldn't have said I will do this. I don't want to get into the political side of things, okay? However, don't forget that we have some heightened geopolitical tensions that we will also be monitoring during this week, okay? Do you think this volatility will continue throughout August? Yes. Yes, 100% yes, okay? Going forward to Tuesday, the 6th of August, which is tomorrow. FOMIC member Daly speaks, definitely something to look for. You know why? You always know why. FOMIC member speeches are really important, especially after really important data releases. So after the FOMIC release or after the FOMIC meeting, which was the previous week, and the NFB release, any members speaking from the FOMIC is definitely something that we will be looking at. Household spending from the pound or the Japan, no. Trade balance from the US is something that we will be looking at. And the EIA short-term energy outlook. And this is pretty much it for Tuesday. Nothing more. On Wednesday, what do we have? Crude oil inventories, which is the weekly number. We have some trade balance from the Chinese economy. Consumer credit. Yeah, consumer credit is hello, guys. Thank you for staying in the room. Please make sure and please write me in the comments if the photo and the video and everything is working fine, as well as the audio. Can you hear me now? Not sure why this happened, but yeah, of course, if markets are bleeding and everything is going bad, my microphone had to do it as well. So yeah, it's a start of a brilliant week, and I can see this. Wait, please, because I'll have to grab my charts as well. So there it is. No, not today, but this week. Here we go. And investing should be reading this one. Yep. Now you can see my economic agenda, right? Okay, that's brilliant. So we were basically, yeah, on Wednesday, the 7th of August, and we're talking about the consumer credit. As we said, the consumer credit is basically important. And why is that? Because it's somehow a leading indicator of, inflation. So markets might be a little bit concerned with how consumers are using their credits. But still, so far, by the way, guys, I cannot see the major risk event because there is no major risk event so far. On Thursday, we will be having a look on the jobless claims, and this is important now. Although this is a weekly number, I'm not always telling you, okay, you'll have to focus with the jobless numbers and jobless claims and so on. However, after a very bad NFB reading during the last week, markets will definitely want to know if this is something, will affect the markets going forward or not. So I think markets will start paying attention more to the jobless numbers, which is the weekly number. Okay. Of course, it's expected to not to go higher. Expectations are to go lower a little bit, 4,000 new jobs. But I think the variation between the previous number and this week's number will be a lot bigger. Okay. Guys, I can see a lot of comments here. I think this is not English. 100% it's not English. I can see people, writing their emails. I'm not sure why. If this is Indian or whatever it is, guys, please. This is Spartan, sir. Okay. Okay. I think this chat here is not, to communicate with each other, as you know. Okay. Anyway, if you need to send something to me, it's either in Arabic or in English. But this Spartan thing, I didn't uh, learn Spartan. Okay. When it comes to Friday, the 9th of August, unemployment rate from the Canadian economy. Okay, guys, let's call this week a boring week when it comes to the economic agenda side. There is pretty much nothing I would say, yeah, I will be looking forward to this. So, yeah, to sum it up, only the jobless claims on Thursday is something I'll personally be watching. Other than that, pretty much nothing. Even the FOMIC members, we only have one comment from FOMIC members this week, which is Dali on Tuesday. Other than that, pretty much nothing. Okay. So, yeah, I think it's time for the technical analysis. Just give me a moment because, of course, oh, no, not this one. Okay. My charts were also closed. So, yeah, I'm just grabbing my charts real quick here. That's number one. That's number two. I think we are ready to do the transition. Okay, what's happening here in the markets? If you have any questions, because of course there are a lot of things to discuss in markets right now, a lot of assets. However, what's the one asset that you would like me to look at? Please leave it in the comments section, and I'll make sure that I'll be discussing this by the end of the session. Okay, let's start by the dollar index. What is happening on the dollar index on a weekly time frame? It seems bearish. Okay. The previous week was super bearish. This one, of course, it's continuing to do this bearish move. It seems to me that there was a flag here. You see this one? That was a flag. So after a sharp decline, we have had 2 weeks of upward moves. We are continuing the flag. And yes, I can see that we might have reached the target already. So the flag target has been reached. We do have some support here, which is the 102.75. Okay, I'll tell you something out of experience. The normal thing to do on the weekly time frame, most of the time, okay, I'm talking about probabilities here. If the weekly candle started, it just started, okay? We haven't really formed a higher wick. It's really small, right? When markets start the weekly candle directly and break lower and continue moving lower, believe me or not, it wouldn't really end the week as a bearish candle. I don't know why I really, lowered my voice saying this, but just for suspense. I don't like what's happening here on the weekly time frame because it started here and it immediately went lower. I mean, if this continued moving lower, this definitely means, markets are panicking. And I don't really believe this will be the case. There is support here around the levels of 102.75. And there is support here around 102.40, which is not so far away. My feeling so far, it's not an analysis because you will have to look at the shorter time frames. Why last week and this week very extremely markets turn? Oh, you'll have to watch from the beginnings, and the recording will be on our YouTube channel. My feeling says that maybe those supports will be able to hold prices above. So yeah, the chart says bearish, super bearish. My personal feeling says maybe not. Will we move lower maybe to touch the lower limit before moving higher? I mean, anything is possible. At this time, anything is possible. What's happening here on the daily time frame? Okay, the daily time frame, we definitely have a demand zone here because this is a drop. We formed a base. So it's a drop, base, rally. There is a demand zone here, 100% demand zone. And yeah, guys, during the last week, I said that we will be having a webinar for supply and demand. You requested it, and we will be doing it soon. Most probably on the 19th of August. Most probably. So not this Monday. No, I think not 19th. It's either the 19th or the 23rd of August. We will just confirm the date and everything will be on our social media, PU Prime. So watch for that one, okay? So here, yeah, we have a demand zone. It's a drop base rally. So currently dollar index is trading near demand. And this is also a demand zone because it's a rally base rally. So it's also something that we should draw here. Again, this is another demand. So to be honest, I think the dollar is not going to continue lower for so long. Because as we said, the reasons for the move lower is purely panic. I don't find enough reasons for this move to continue. Technically, we're having two very strong demand zones on the daily time frame. And specifically the area where those demand zones, you know, let's say interfere in price range. So the levels of 102.50 is really strong on the dollar index during this week or during today, pretty much. Because yeah, if we broke below, we would continue moving lower, of course, to maybe 100.60. That's the nearest support. But I don't think this will happen. I cannot see it. So from here, I might expect an upward move. Let's see what's happening on the lower time frame. The point is, it's really risky to buy from here right now, given all this panic and selling off. However, just, you know, call me crazy. I believe the dollar will find really hard time breaking below the levels of 102.50. And it's not really far away because it's today, you know, it's already trading around those levels right now. So today we will know whether we make it above those levels or we break it. Either way, you know, maneuver. If we stay above the 102.50 and we have some sort of rejection from here, we will definitely be retracing higher, at least to the levels of 103.70. Of course, on the other hand, the break lower will continue the move lower. Personally, okay, we have our scenarios set here. Staying above 102.50 is bullish for the dollar during the week. Breaking below is definitely bearish. Personally, I'm more tilted towards the bullish scenario. Let's wait and see what's happening and what will happen. Okay. I will have a look on gold right now before looking on the euro versus the dollar and other stuff. Okay, guys, I think we have explained this during the previous week, and I said that we do have some major supply zone on the weekly time frame and the daily time frame on gold. Please leave it in the comments. Just write anything in the comments if you remember this, because we mentioned on the daily time frame that we have a supply zone on gold which is around 2460. And we said I would really appreciate gold pushing higher to touch my supply zone before moving lower, which was exactly what happened on Friday. So prices went higher. We touched the 2460. As we said, it's a supply zone on a bigger time frame, which means that the institutions which sold gold here definitely had some unfilled orders inside the supply zone. So as soon as we went higher, we touched those unfilled orders. We had this great lower move of around $65 in maybe 4 hours. Okay, that's the power of supply and demand. When you know where are the unfilled orders for major institutions, prices when they come back to those levels, we will definitely move lower again. So I stick to my scenario technically, okay, technical wise, because during the week anything could happen, uh, especially with the geopolitical tensions, okay. But technically, given the current situation, I'm bearish on gold, and I believe we might be targeting the levels of 2385, maybe. This is what I'm seeing on gold. Absolutely bearish. We had our supply here, prices touched, unfilled orders, we are pushing lower. So during the week, as long as we are trading below the levels of the previous high, 2482, I don't really believe gold will go to extreme highs and new time highs. So yes, do you believe gold is a sell on rallies? I do. Technically, I do. However, guys, let me just tell you something. During this week and when opportunities are in the market, but with high volatility, what we personally advise with is if you enter a trade, just enter the trade with the minimum risk possible, because at this current time, we are starting new trends. So if gold rejected the levels of 2460, okay, don't buy with the full margin, because if we are going lower, we are going lower for some time. We are starting a new trend here because two rejections around the same level, it would be a double top. Do you know where this could take gold? At least to the levels of 2300. Okay. So in this case, I would be smart with my positions by entering small positions. And on every upward move, I will re-enter sell position, re-enter sell position. So I will be adding to my risk gradually just to make sure that I'm on the right side of the market. Because what happens if I tell you sell gold, you sell gold with, the maximum lot size that you can and just goes higher. Definitely can happen. But in this critical situation in markets, add to your risk gradually. This is something I would highly uh, advise you to do. Okay, moving forward to US oil, what's happening here on the higher time frame? Something here supported prices higher. So we are bearish. 1, 2, 3, 4, 4 weekly bearish candles. And yeah, we might see another bearish candle on US oil during this week. We do have support here. Yeah, this is the demand we definitely should look at. You see this? Strong move lower, base, move higher. You see this whole move higher? It started basically here. So there is some sort of demand here. And I would say this is a demand zone on US oil. It's not fresh, to be honest. So this demand zone started the move higher from 72 to 87. Okay, someone here needs to be blocked, I think. Can we? No, we cannot. Okay. Wait. Yeah, here we go. Remove, get out. Okay. So this was the demand zone which started the upward move of maybe 20% increase on US oil. However, we went back again and it was tested. So the unfilled orders were basically filled this time and we went higher. So this is not a fresh zone. And that's why we will be keeping an eye closely around the levels of $72 per ounce. Okay, what I do expect on gold will happen, I'm sorry, the US oil is an upward move from those levels of demand, but we will eventually break lower. Okay. So the longer term analysis is we will break below the 72 and the 72.50. But during the week, we might be able to catch an upward move, an upward retracement. Okay. It will be risky. If you don't know how to catch the retracements, don't. However, this previous downward move, let's say we will be moving higher to at least 75.80 or maybe 70, let's say $76 per barrel. So 300 pips higher is something I personally expect on US oil. And from here, we can add to our short positions and brace for the break below the demand zone. Because as we said, it's not a fresh demand zone, okay? What's happening here on the US indices is crazy. Let's start by the S&P 500. And we will definitely start by a weekly time frame. And as we can see, it's super bullish. Nothing to say. It's super bullish. On the daily, this is not even a demand zone. Or it might be a large one. Okay, guys, I'll definitely answer all your questions. We have the Aussie dollar, we have the pound, we have the euro, everything will be looked at. Don't worry. But the thing is, because I don't really look at charts before I go live, I love to do it on the live session. So you can just give me, a couple of minutes here. What's happening on the S&P? It's definitely around some levels of interest, which is the 5,200 or maybe the 5,250. Will we see a rejection here? It's risky. It's really risky. It might be a false break, and we will definitely move higher. Okay. Something I want you to do is never think of buying the US indices this week. Don't. Just don't. Because after this huge move lower, we might see a retracement, yes. However, it would be best, to short from here. So I'm looking at potential short entries, and maybe this one might be a good potential short entry because prices went lower. Whatever they are doing at the moment, this is a support, a previous support, and this is might be, a false breakout. So I want to see prices go higher to retrace, and from the levels of resistance here around the Fibonacci retracements, I might think of shorting because at least, if prices went higher and we short, at least we will be testing those lows again. So I'm looking basically to trade this downward move here of around 230 pips, maybe. So yes, the Nasdaq or the S&P, I think it will be the same on the Nasdaq as well. So yeah, and on the Nasdaq here, you can see we reached some sort of support around here, and that right now we are heading higher. Okay, prices. I'll tell you something. Prices will not do this. It's hard. After this downward move, it's really hard for prices to just continue moving higher because here we have some sort of institutional selling. So what I'm planning to do is at least I'll be looking, to form a base before continuing higher or of course continuing lower. So yeah, this is what I'll be looking at. Fibonacci retracement, again, levels of 18,600 or let's say 18,700 might be areas where I'll be shorting the Nasdaq. On the S&P, 5,400. Okay. Okay. On the Dow Jones, pretty much the same, but I think the Dow Jones is more simple. Yeah, so the Dow Jones is near some sort of support here. Okay. The levels of 39,000. I believe we might see some rejection from the levels of 39,000 to at least the previous. Yeah, maybe you can see something like this. So a move higher from the 39,000 to the levels of previous support, which will now be resistance, which is 40,000. I might think of shorting around here. Okay, yeah. Markets are challenging technically because you cannot just follow what's happening technically. You just want to follow what's happening and understand how market participants are reacting. This, guys, is the VIX index, which is the volatility index, or as we call it, the fear index in the markets. Okay. After the NFB move, would you consider euro dollar bullish? Let's check the euro dollar. Yeah, I think we have the euro and the pound we have to answer about. Remember, guys, no, I didn't say this in the previous weekly analysis webinar, but this was on the previous report that I shared, is that I expect the levels of 1.0785 to push the euro higher. And yeah, here we are. The euro versus the dollar. On the longer time frame, it is bullish. Okay. This here, what's happening is a bottom formation. Slightly turning bullish. But I don't think we will continue bullish directly. Why? Because we just broke above resistance. So this is now support. We have another resistance here, right? Another resistance here. We have another resistance here. So it's really hard for the euro versus the dollar to break above directly without, retracing first. And don't forget, on the dollar, I'm expecting that those levels of support might hold during the day. So an upward move on the dollar from here might mean a downward move on the euro before heading higher. Maybe something, like this before heading higher. So yeah, generally, okay, just to put things into context here, generally, I'm bearish on the dollar. I should be bearish on the dollar. I am bullish on the euro and of course the pound. It's just the thing of when to buy the euro. I would definitely not buy after this upward move. There is some resistance here. What I would personally wait for is a retracement to add to my positions and to go long, because this here the area of around 120 pips on the euro to the left is what we call as the path of least resistance. There's nothing here that can stop the euro, and other than the top formed here. So I think the best thing to do on the euro is wait for a retracement, go long, and target the highs of 1.11. Okay. I think I'll have to end this session here with the pound versus the dollar. Saikat says, "Can you please analyze gold?" We have spoken about gold already. You can check it in the recording on YouTube when we're done. Okay. The pound is around the levels of 1.2780. Okay, the pound is basically, so we had a drop base rally, which is a demand zone. So here is a demand. Prices immediately went lower to test it. Do you see what happens if you have previous unfilled orders and prices comes down? Definitely the filled orders, just gets filled in and boom, we are expecting a move higher. So I'm more bullish on the pound, to be honest. So it's a move higher. This is a rally. This might be a base. We might see a move higher on the pound. So yeah, I'm bullish on both the euro and the pound. But for the euro, I'm waiting for better prices, which means a retracement to buy. And for the pound, I'll be waiting for... I'm not waiting for anything on the pound. It might be a good trade option, but this candle is really bad. This candle is really bad. We have our targets around 1.2850, 2885, all the way to 2930. This is what I'm expecting on the pound during during this week. Of course, if we break below this support here, 27, it's a definite buy, definite sell. Sorry. Okay, I think we're done here on today's weekly analysis. It's pretty challenging today. It's really, really challenging. It will be a tough week. Guys, I'll tell you something. Markets are not going anywhere. If you don't have the what to say, if you don't have the courage to trade markets when they are like this, just stay away instead of losing your money, because markets are not going anywhere, but your money might go to your broker. I mean, just wait. If you cannot perfectly see what markets are doing, personally, during this week, I will be lowering my risk maybe by 50%. Because I don't want to lose more money than I'm willing to lose. So yeah, just watch the markets, just try to learn, because those moments are perfect for you to learn. So yeah, let's wait and see what happens. And if you have any questions during the week, this is an option, by the way. Please, you can first of all send to our social media, whether to Facebook or Instagram or whatever it is. Just send a question to our social media and just write in this question what you want and tell this is a question to the Chief Markets Analyst, and they will definitely send it to me. I'll make sure that we can answer this to you. Is Australian dollar or the Australian versus the dollar bearish? Wow. We missed this one. That's a perfect drop base rally. So that was a demand zone. Unfilled orders came down, filled the orders going up. So no, on the Australian versus the dollar, I'm basically bullish during the week. And yeah, this confirms my bearish view on the dollar generally, but I'm looking for an upward move before selling the dollar. Do we have any questions that we didn't answer yet? Okay. I don't think we do have any questions left. And yeah, again, if you are speaking Arabic, anyone who's here today, if you do speak Arabic and you want to have more insights on the markets on the daily time frame, or I mean daily analysis session, I'll be live on our YouTube channel after 5 minutes, but in Arabic for our Arabic clients in the MENA region. So if not, I would like to thank you everyone for being here today on this live session. Thank you very much. I'll meet with you again next week. Hopefully, when we meet, you will still be in the markets. Hopefully, we will be able to discuss this with our banks, with our accounts still having any funds to trade with. Thank you very much. I'll see you again next week. Please trade safe and stay safe. Goodbye.